Hello there, and welcome to this $4 billion battle at My Finance Teacher. The $4 billion battle because these three gold miners have a market cap of anywhere around $3.5 to $4 billion. Which one of these is actually most worth these numbers based on the fundamentals as they published at the end of 2024. And the miners we are looking at today are Pan American Silver, B2Gold and Eldorado Gold. Pan American Silver, while they do produce quite a bit of silver, the majority of their production, well over 50% of the value, does come from gold. So I'm going to bunch this Pan American Silver together with these gold producing majors. If you do want me to have a look at some of the majors producing silver separately, let me know down in the comments below. Years ago I used to have these series of videos looking at the silver majors as well. Moving on to the gold price, as usual, I'm going to look at three scenarios: conservative, balanced and optimistic. Current gold price has reached above our optimistic price already, but to stay consistent with this series of videos, going to the beginning of this year, looking at Q4 2024 results by the majors, we're going to stick to the conservative, plugging in 2200, balanced, plugging in 2600, optimistic, plugging in the gold price of only $3,000. Next, moving on to what these $3 to $4 billion majors have in the ground, we start with proven and probable gold reserves, which are by far the highest at Eldorado Gold at nearly 12 million ounces, followed by 7.4 million ounces with B2Gold and 6.2 million ounces with Pan American Silver. Looking at silver proven and probable reserves, deservedly with silver in their name, first is Pan American Silver with over 456 million ounces of silver, followed by nearly 37 million ounces of silver in Eldorado Gold. That's less than 12 times the amount of silver held by Pan American, and no silver reserves reported by B2Gold. Next, looking at copper proven and probable reserves. Again, first here is Eldorado Gold at over 1.6 billion pounds of copper. Pan American is second at over 105 billion pounds. That's over 16 times less than Eldorado's copper endowment. And again, no copper for B2Gold. Moving on to measured and indicated resources. That's exclusive resources, meaning the resources that do not include the PNP reserves. Instead, they are in addition to PNP reserves. We have all three here pretty close at over 11 million ounces for B2Gold, Pan American Silver and Eldorado Gold, both at over 2 million ounces. Moving on to measured and indicated silver resources, again deservedly due to their name, Pan American Silver is at over, wait for it, 1.1 billion ounces of silver, followed by Eldorado Gold all the way down around 22 times less silver at 54 million ounces. M&I copper resources are only reported for Eldorado Gold at over 830 billion pounds. Looking at the costs of extracting these reserves and resources out of the ground, we're looking at all-in sustaining costs. The leader among these three with the lowest all-in sustaining costs according to their 2025 guidance is Eldorado Gold at $1,420 per ounce, followed by B2Gold at $1,490 per ounce, and Pan American for 2025 expects $1,575 per ounce of gold. So there you are. Overall, in terms of gold equivalent ounces, pretty similar majors, a bit difficult to choose so far, so let me know down in the comments which one do you prefer among these three. Moving on to the financials, starting with the long-term debt, the leader is B2Gold at $422 million, followed by Pan American Silver at $756 million, and the highest long-term debt is held by Eldorado at $933 million. Moving on to the numbers of shares outstanding, you would of course compare this number to the share price. You can simply search for the current share price on the internet. The lowest number of shares outstanding is with Eldorado Gold at over 205 million shares outstanding, followed by Pan American Silver at over 362 million shares outstanding, and B2Gold has over 1.3 billion shares outstanding. Among those shares, it's important for the insiders, for the company managers, to own a substantial percentage of those shares to align those incentives between the managers and the shareholders. The insider percentage is the highest for B2Gold at 0.4%, followed by Pan American Silver at 0.07% and Eldorado Gold at 0.02%. For the time value of money, I'm going to use a discount rate of simply 7%. Mining is a somewhat dangerous industry, so if you think I'd better use a higher discount rate, again, let me know down in the comments below. And of course, this time value of money applies to the average mine life based on the proven and probable reserves and the annual production as expected for 2025. The average mine life of reserves is 12 years for Pan American Silver, 7 years for B2Gold, and 25 years for Eldorado Gold. Adding half of measured and indicated resources extends those average mine lives substantially. As for tax, for simplicity, I'm simply going to assume a flat tax rate of 25% for all of these miners. We also do look at the amount of cash they are holding, although it's not explicitly modeled into our calculations. Instead, I look at it as an additional risk metric. Remember that Goldcorp, which used to be the largest gold miner in the world, they were eventually acquired by Newmont. Ask me why, and we are looking at cash. The highest amount is with the Pan American Silver at over $860 million, followed very closely by Eldorado at over $850 million, and B2Gold holds over $330 million in cash. So with all of these fundamentals of what they have in the ground, cost of extraction, as well as the financials, let's move on to our valuations. Before that though, let me remind you that there is a wealth of information waiting for you at myfinanceteacher.org. And in the current fast-paced environment, it's important to be an informed investor. We have regular updates on the general market, commodities, including natural gas, gold, crude oil, as well as uranium. And we have regular updates on some of the most interesting juniors. Here are a couple of examples on the screen. For much more on juniors, make sure to check out this category, Juniors in Metals. These are basically the prospect generators that are going to add that additional torque to your portfolio once gold miners in general catch up with the skyrocketing gold price. And now moving on to our valuations. Let's start with the conservative valuation, where we plug in the gold price of only $2,200 and look at the proven and probable reserves in the ground without considering any of the M&I resources, never mind inferred resources. All of that gives us the discounted per share value after all-in sustaining costs, long-term debts, and taxes of only $9.45 for Pan American Silver, $2.1 for B2Gold, and $18.28 for Eldorado Gold. Not that exciting, but look at it as some sort of a risk metric showing you what might happen to the miners' share prices if gold simply drops out of bed here. Moving on to our balanced valuation, we plug in the gold price of $2,600, still quite a bit below the current price, and even in our balanced valuation we still look at proven and probable reserves in the ground only, without considering any of the M&I, never mind inferred resources. That gives us over $16.1 for Pan American Silver, nearly $3.4 for B2Gold, and over $28.4 for Eldorado Gold. This does look a little bit better. Let's look at our final optimistic valuation, where we plug in the gold price of only $3,000. So even our optimistic valuation does lean quite a bit on the conservative side. In this valuation, we plug in the proven and probable reserves in the ground, as well as only half of measured and indicated resources, never mind any of the inferred resources, giving us over $38 for Pan American Silver, over $7.50 for B2Gold, and nearly $49 for Eldorado Gold. Wouldn't that be nice? That's basically doubling or more of the current share price with the gold price at only $3,000. Where's the gold price at right now? Well, it's $3,300. So the miners still seem quite a bit undervalued versus the gold price performance. And that's at least partly perhaps because some of the players, especially a lot of the Asian investors, do prefer to invest into gold itself rather than those miners. But if the Western investors catch up with this trend, then perhaps the miners will catch up with gold and, as they often do, outperform it eventually into the top of the bull market. The question is, when is it going to happen? What do you think? Let me know down in the comments below. Have a terrific Tuesday. Bye bye.